The other video is a couple years old. I'll make a new video. Surely I'm a little bit better since 2 years ago. So the blank work together balance sheet. You've got their example here on page 469. Of your balance sheet. So we're just going to just find the same numbers from our worksheet for that. Oh, then here we go. Yeah, using the worksheet and statement of stockholders' equity. Use the balance sheet form to prepare the balance sheet for the current year. So yeah, those are the only two things we're going to need: the worksheet and the stockholders' equity form. So in the stockholders' equity, that's going to be on the bottom half of the sheet. So going to this, you're just going to start just like on the top here. We're going to fill out our header. So Interstate Tires. Balance sheet. December 31st. We'll go ahead and make that 2018. Doesn't really matter though. All right, so the top half, I'm going to do the top half today. That's just going to be our assets. So we've got our first line. We're just going to label our first line for the section for assets. Like that. And we're going to use another line, current assets. Where that's everything that he owns that has value. Okay, so we say our first item, cash. Cash is an asset. So we'll write cash on here. It's going to go in the second column. And see on your worksheet, cash, $12,848. So we're going to use the balance statement columns for this one. So cash, $12,848. That goes here in this middle column. I think the next one is petty cash. Yep. And we've got petty cash. So on our worksheet, petty cash, $300. Okay, now we've got accounts receivable, but it's going to go in this first column. So I just put AR there for short for accounts receivable. Here, next one down, accounts receivable, $18,438.90. Remember, accounts receivable, those are all the people that owe Interstate Tires money. Businesses are people that bought stuff on account. But also, because people buy stuff on account, some also default. So we're going to, so less allowance for uncollectible accounts. That means we're going to subtract this amount eventually. So put our, let's go and write that here on our sheet. Our allowance for uncollectible accounts down here in our balance sheet column, $2,527.29. So as you can see here in the example, we're going to subtract our allowances for uncollectibles from the AR and put that amount here in this middle column underneath our cash and our petty cash. So 18,438.90 minus 25.27.29. It was 15,911.61. That goes in the middle column. Eventually we're going to add all this, everything in the middle column, eventually we're going to add all that up. So next one down, we've got our merchandise inventory. So merchandise inventory, 188,999.25. Lot to squeeze in that little area. They have our supplies for office and store. The supplies for office and store on the worksheet. $8.59 for the office. $8.54. And then for the store, we got $1,300.68. So then, and now it leaves us with our prepaid insurance. The reason prepaid insurance is an asset, excuse me, if you remember if we cancel our insurance policy today, whatever had been paid for the insurance, whatever's left, we'll get that money back. So it's the same way with the car insurance. If you switched insurance companies, whatever's left, say if you had 2 months worth of insurance left on your current policy, you'd get that 2 months worth of insurance back. So prepaid insurance, we still have $3,000 left on that. Then we're just going to total all that up, total current assets, and put that in the third column. So you're going to add all these up and put the total here in the third column. So we've got 12,848 plus 300 plus 15,911 61 cents plus 188,999 and 25 cents plus 854.59 plus 1,300. $1,368 plus $3,000. Okay. So that leaves us with $223,000, 214.13 cents. I'll write that out to the side. Like that. That's what we have for the assets section. And then we're going to work on plant assets. So that's everything that's in the building and the equipment. So plant assets. And my writing isn't the best this morning. So first one, we've got office equipment. So we've got office equipment here on our worksheet, $18,486.38. So that's going to go in the first column. 18,486. $0.38. So that's what the office equipment cost. Now we're going to deduct the depreciation from the office equipment. So less depreciation. We got that just on our next line on our worksheet. Depreciation, office equipment. $13,745.25. So it looks like this office equipment's almost done from the accounting process to the worthless part. Okay, so we're just going to subtract the 13,000 from the 18,000 and put the difference right here on the middle column. So 18,486.38 minus 13,745.25. $7.45, 25 cents. So that leaves us with $4,741, 13 cents. So this is the current value of our office equipment, at least on paper. If any of you has ever tried to sell something on Craigslist, just because you think it's what it's worth doesn't mean that's what somebody's willing to pay. Okay, so what's the next one? Okay, now we've got our store equipment. I'll put a line under here. So we've got store equipment. Then we're going to add depreciation of store equipment. So it says our next line down on our worksheet, store equipment, $32,184.07. Then I get our depreciation for store equipment, $24,236.45. So once again, we're just going to subtract the depreciation from what the original cost was on the store equipment. Put that amount right here in the middle column. $32,184.07 minus $24,236.45. So that leaves us with $7,947.62 for our store equipment. Store equipment. Okay, so now we're going to add these two numbers together for the total value of our plant assets. The $7,947 plus $47.41, 13 cents. $12,688, 75 cents. So we've got our cash and inventory assets up here. We've got our plant assets, which in this case is just furniture and equipment in the store right here. So we're just going to have our total assets. So all we're going to do is just add these two numbers together here. for the total value of everything that owns. 1,000 plus 223, 214, 13 cents. So $235, 235, 902, 88. So that takes care of the top part for the assets. Tomorrow or Wednesday I'll do the liabilities. If you have enough time to do the liabilities, you can. That's fine. You can work ahead. So I got the assets for the work together. Now you can do the assets for the on your own. As you can see, it's first looking at it, looks like, oh, where do I get all this stuff? But really, pretty easy. So that's where I'll stop today.